Hello and welcome to CIA News Analysis, where we apply the info warrior mindset and worldview to the financial news. Thank you for your support. Alright guys, in our first headline here we see The Big Short. Former IMF economist finally closes year-old Bitcoin short. And remember, the IMF is the International Monetary Fund, the same swampy home to Christine Lagarde, and it is the central bank of central banks. These are not people that you want to invite over for a weekend hangout. A year ago today, Bitcoin peaked at $19,511. Former International Monetary Fund economist and Faro senior risk trader Mark Dale made an unpopular bet not long thereafter. Bitcoin would not sustain its growth and the price would slip from there. He entered a short position and rode his intuition all the way to the bank, finally closing the position today. And we can see that today I say goodbye to the Bitcoin short. Sad, hashtag Bitcoin. And he told Bloomberg that he's already taken profits twice this year on the position, but now he has finally decided to close it altogether. He didn't comment on whether this is because he sees an upswing coming. He said, "I'm done. I don't want to try to ride this thing to zero. I don't want to try to squeeze more out of the lemon. I don't want to think about it. It seemed like the right time." That's called investor intuition, and this is the intuition of an IMF economist, somebody in the upper echelon of elites that understands where this technology is going and how it's going to be used in the future. He already took profits twice on the position, but now he feels that Bitcoin has most likely bottomed, and he wants to take profits all off the table on this position and not have to worry about what he said earlier, which is Bitcoin is volatile. And of course that means Bitcoin can go up just as fast as it can go down. So you got to take what you can get when it's on the table. A lesson well learned from this previous market cycle. In our next article, we see that the UK tax agency publishes detailed guidance for crypto holders. The United Kingdom's tax agency has just released a comprehensive explanation of how it sees crypto assets and how individuals may be taxed on their holdings. Her Majesty's Revenue and Customs, the government agency responsible for collecting taxes and overseeing other aspects of the nation's coffers, explained that Wednesday's report specifically focuses on how individuals possessing crypto assets might be taxed, but does not outline the tax scheme for tokens held by businesses or for business purposes. Guidance on that will be published at a later date. And it's interesting to note here that the HMRC does not consider crypto assets to be currency or money. This reflects the position previously set out by the report from the Crypto Asset Task Force. It explains, noting that the task force classified cryptocurrencies as either exchange tokens, utility tokens, or security tokens. Finally, the paper considers the taxation of exchange tokens, which is how they classify Bitcoin, and does not specifically consider utility or security tokens. For utility and security tokens, this guidance provides our starting principles, but a different tax treatment may need to be adopted. And what we can see here is that the governments are moving forward with the adoption of blockchain. Blockchain as a technology and the benefits that come with utility tokens and security tokens, but also blockchain as a currency. And of course, there in Great Britain, they call it an exchange token, but here in the United States, the CFTC regulates Bitcoin as a commodity. So this is all part of the emerging asset class of digital currency and blockchain as a technology. And I think what we really see here is that real regulation, regulation that can be enforced on a worldwide scale. I think we're really going to see that with the institutionalization of Bitcoin in the United States of America. If you have not listened to this podcast, then you really should take the time to listen to this Ice House podcast. It was recorded at CoinDesk's Consensus Events Conference, and its back CEO Kelly Loeffler and ICE's owner, chairman, and CEO Jeff Sprecher. They chat with MIT Media Lab's Michael Casey. It says BAC plans to roll out the world's first one-day physically delivered Bitcoin contract in 2019, allowing institutions and consumers alike to seamlessly buy, sell, store, and spend the digital asset. While Bitcoin's value may rise and fall, the profound appeal of crypto is not so much as an investment to buy and hold, but rather a currency to actually put to work. And this is a quite revealing conversation where we find out that the ICE, who is the owners of the New York Stock Exchange, they've actually been working on this product since 2014, and now they're really ready to bring the market to product, and they're targeting January 24th as their launch date. Of course, that's pending CFTC approval. What we really want to take away from this, though, is the point that Jeff Sprecher makes in this podcast, and that is that the institutionalization of Bitcoin is going to happen because all of the institutions that currently trade with ICE, and these people are trading oil, they're trading stocks and bonds, they're trading everything. They're all the biggest traders in the world. Those people, those institutions have come together and developed a set of regulations that they all agree on, and they have taken those set of regulations to the CFTC and are awaiting their stamp of approval. So Jeff Sprecher could not be any more bullish on Bitcoin moving into regulation and receiving the stamp of approval from the CFTC, which would be a stamp of approval basically from all the institutions involved in drafting that regulation, and would set the standard for crypto regulation in the United States, but also may also develop global standards, as well as the report we saw from the UK in our previous news for the G20 standards. Some sort of combination between the CFTC approved backed futures regulations and the UK drafted standards could end up being a worldwide standard we see applied to crypto in a very short span of time. Speaking of regulatory approval, our next article we see the VanEck Exec on lack of Bitcoin ETF. What effing parallel universe is this? Could be a little bit biased with that one. A digital asset strategist for New York-based veteran investment management firm VanEck is pretty irate that there is still no exchange-traded fund for Bitcoin. We can see that Matt Odell made a comment about Coinbase. He said their main advantage is the regulatory moat they've built themselves, but they're trying their best to mess that up. And of course, he's talking about how Coinbase has been adding more coins, and there's still not clear definition on what Bitcoin is. It's a security, it's a commodity, it's a currency, it's property. So they don't want Coinbase to move forward fast, figuring that they're risking regulatory approval. And Gabor has to comment, and he says Coinbase coins are okay for millions of retail investors. Bitcoin ETF for institutional investors, too crazy. What effing parallel universe is this? And he categorically used the word Bitcoins in regard to several tokens that Coinbase has added to its platform in recent months, including the Basic Attention Token, Ethereum Classic, and Zcash. In a past era, he might have been widely lauded for his Bitcoin maximalism, but in present times, Bitcoin dominance is far from a settled fact. And then he goes, go off, King is, I'm close to going off. The effery must end. The current treatment of well-designed Bitcoin vehicle proposals is beyond unreasonable. The gray area activity that most of us fight against are caused by the discrimination against regulated products. Self-purge is the only way. And I think as someone being part of the VanEck team, he knows that the regulations that they've built with the institutions that invest through their firm have put forth some pretty solid regulations, and that he's saying that the gray area is based on discrimination against the regulated products, which is basically the ETF on Bitcoin that he's talking about there. And this is interesting that he would come out and be so vocal, because typically working for a company like that, you wouldn't come out and say something like that because it could hinder the process of what's going on with Bitcoin. So I think in the long run here, this may actually hurt Bitcoin more than it helps it, because VanEck is the firm that everyone sees as the biggest, most powerful, with the most persuasion to go into the SEC and convince these overseers that this is a legitimate financial product with legitimate regulations that the institutions are ready to recognize and ready to invest in. So very interesting that he would be this aggressive with his opinion. Hopefully it has no effect on the upcoming SEC decision. We'll see how that works out next year in the end of February. And we'll remember that the SEC commissioner says don't wait on Bitcoin ETF. Could take days or years. She says don't hold your breath. I do caution people not to live or die on when a crypto or Bitcoin ETF gets approved. You all know that I'm working on trying to convince my colleagues to have a bit more of an open mind when it comes to crypto. I am not as charming as some of the others. So we see that the SEC may be nowhere close on making this decision. Yet the final remaining bulls left in the market are pointing at backed and pointing at the ETF and saying, here's our chance at the sparking the bull market. Well, I think the bull market really ends when all the bulls die, and it just may happen that the CFTC as well as the SEC postpone these decisions even further, and in the case of the SEC decision, they would have to reject it, and then it would have to be reapplied for because they've already postponed that decision as far as they could. Thank you for joining us here at CIA News Analysis, and thank you for your support.